Welcome. Yet another video from Peaceful Weekend Investing. Today we're going to talk about Dow Theory. This is one of the core principles of technical analysis in stock market, and you must be wondering, why do I talk about Dow Theory and what's new? Everybody's talking about it. Yes, it is a principle which is still valid today. If you want to know how can you save your hard-earned money if you are investing in stock market or you're about to invest in stock market, this video is for you. What I'm going to cover in this video is just not simple Dow theory. I'm going to talk about Dow theory principle, go over that quickly, and also give you real-time application of recent stock collapse of Evergrande in China and see how we can apply that Dow theory in real life example as of recently happened this month. So it's going to be a really powerful video if you want to know how you can save from any crashes coming through of any investments you are doing today in stock market. So let's go straight into the video. Quickly, I'm going to talk about what we're going to cover in this. We're going to talk about Dow theory, why and what, go into all the 6 tenets of Dow theory, and then use those tenets and see in the real life example how Evergrande stock collapse happened and what was the postmortem of it, how could we apply the Dow theory, and I will show you the example in the real chart. Hi, my name is Shivendra Bhatia. I'm a founder of Peaceful Weekend Investing Hub, trying to make investing simple, easy, and accessible for busy professionals like you. If you haven't subscribed, I would request you to subscribe to the channel, hit the notification bell so you get notified with the next interesting video I'll be coming shortly. It's going to be really powerful video, so I would request you to sit peacefully, make a lot of notes, and at the end of the video, do write your understanding in the comment section below of the video so that A, it solidifies your understanding, and B, it also helps the fellow investors who are also trying to learn and invest in stock market. Thank you so much for that. So let's get into the details. One of the funny things about stock market is that every time one man buys, another sells, and both think they are astute. But it's still so true. If you are buying, somebody is selling. So it is always an opposite forces of thought process which makes the market moving. So you need to understand either which individual is smart, either the person who's buying has more information or person who has selling more information. Yes, why am I talking about this? We'll see this in example today what we're talking about. Market cycles, Dow theory. Charles Dow, who kind of documented some of the price trends back in days in 1900 and put down all the papers in Dow Jones, and that's why it's called Dow theory. And he kind of noticed that there are some prices that market follows both long-term and short-term trends. And he was kind of doing the rice trading, and there's a very interesting history behind it. Do read it. It's all available on internet. But for this particular video, I'm just going to briefly talk about it. There are different trends he noticed way back in 1900. And that trend is still valid today, and we're going to see that in detail now. Why Dow theory is important today? Why it still is important even though it's been documented in 1900? What the core principle of Dow theory is, the price moves in trends. And that's kind of fundamental of technical analysis as well. But at the end of the day, what is important is those prices that are moving in a trend are based on the market behavior of the participants. And that's kind of linked to a kind of pattern which you can identify. So it's kind of a bigger picture if I'm trying to convey here, that everything moves in a trend. And as they say, trend is your friend. You have to look at it, historical trend, and most likely we are trying to aim and give the probability of what's going to happen next. So let's go through quickly the 6 basic tenets of Dow theory. Market discounts all news. So this is based on the efficient market hypothesis that all the news which is there, that's already factored in the price, right? That's the basic fundamental of first tenet of Dow theory. So whatever we see today, unless otherwise something unexpected happened, like what happened in COVID, everything is already factored in the price, and that's the philosophy of the first tenet. Market discounts everything. Going to the market has three trends. And this is important and core fundamental stock market. You need to understand what are these trends. There is a primary trend of any stock, as you can see on the chart here, and there is a secondary trend which happens during a particular different time frame, and there is a minor trend which happens even in smaller time frame. So once you understand these trends, you will be able to identify and eliminate what stocks you have to work and what stocks you don't want to work, and what is your time frame also. It's important. Let's move on. The third tenet is every trend has three phases. Yeah, what we talked about in previous tenet. We talked about there are three trends, but these are phases. There are three phases. Every trend has three phases. Okay, so now I'm talking about among those three, short term, medium term, and long term, we have three phases within them. What is it? It's uptrend, downtrend, and sideways. Let's take an example. So as you can see here, initially on the chart, you have a accumulation phase, that is the phase one, and then you have a public participation, which is like going up that's an uptrend phase, and that we call it a bull market. Then there's smart investors get out of that particular stock, and that's a distribution, and their retail participants comes into play where there's a lot of news, a lot of hype, and then the distribution happens, and that's where the public start participating into those stocks, as thinking that they're getting a value buy when something has gone up 10 times. So, and then there is a final panic phase, and this exactly happened in Evergrande, and we'll go through that, the bull phase, bear phase, and what was the overall trend there. Okay, hope you're liking the video so far. Do subscribe to my channel, and also hit the notification bell, and make sure you press the thumbs up as well. That'll be great. Thank you. Let's move on. So there comes the other tenet, indices confirm each other. What does it mean? It means that this on the chart here, we means that there's an indices for Dow Jones Industrial Average in United States, and there's a Dow Jones Transport Average. This was made way back. Now you can have different industrial different parameters or macro parameters which can be looked at it. But what is important is that if there is a trend, you need to make sure there is an industry output, as well as same time the goods are being transported from one place to another. That's why we have transportation average. You can't have a trend where industry aspect of the Dow Jones Industrial Average is going up, whereas there is no movement of the goods. Basically, essentially, it's trying to say that everything has to move in a particular trend. If you find a divergence, then you are thinking you need to understand and review what's actually happening here. As last tenet of this, trends are confirmed by volume. Now, what does it mean? If something's going up, as you can see in the green arrow, and up there in the cycle, and the below bar is bars which are basically the volume bars, then if something is going up, you need to have a volume supportive move. If something is moving down, you should have either the small volume or large volume depending on the trend. And likewise there, you can see. If something's going up, it has to support by volume. If something going down, it has support by volume. So to confirm the trend is intact. There are some criticism of the Dow theory as well. Those were the kind of principles here. But what are the criticisms of Dow theory and why it is not so commonly being talked about is that the signals are too late. By the time you get to know the trend, you've already kind of lost your capital, or the signals are very late, so you don't get to know certain things happening quickly. That's one of the criticisms. Second being, investors have to build their own understanding and skills to interpret the Dow theory. But once you understand, it is really powerful. But sometimes it leads to doubt in terms of what could be the right way of looking at it, and everyone interprets differently. Third being that it doesn't help when it is in sideways or intermediate trend for investors for short term, but it works beautifully for long term. So that's what peaceful weekend investing is all about, looking at long term trends and always focusing on long term investing. So for us, it is absolutely a fantastic approach, and we look at it more objectively rather than subjectively. So let's now go through the interesting part of the video, which is China's Evergrande Stock collapse postmortem and Dow theory application. And that's all over the news, but this is something which gonna blow your mind away. Look at here. This is a monthly chart of Evergrande, which I picked up just now when I'm recording this video. And Just before I progress, I want to just make sure what I'm sharing is just my knowledge and understanding, which I'm sharing with you guys. Please don't treat any kind of investment advice, buy, sell recommendations of any of the stocks that we discuss in this channel or in this video. Please consult your financial advisor before making any action. Look at this monthly chart. Each bar of green and red is a monthly bar. As you can see, there has been a sideways movement of the stock, and then there was a big rally up, and then ever since after that, stock has been in downtrend, as you can see here. So let's say you bought the stock here at the breakout, and then after the breakout you made decent amount of money from close to $6 up until $32, and then after that there was a trend which was sideways for some time or downtrend. And as you can see on the line there, which I put a blue line, it was a complete exit at $18 about, where trend has changed from long-term basis. On monthly chart, the trend has changed, and one has to exit, and exit. If who hasn't not exited, they will be holding the stock. Now the stock is gone down to $2 from $32. Completely in shambles the stock is right now. But stock market was already telling in from 2018 onwards, 19, 20, that something not correct in the stock. And if somebody missed out all those 3 years, you had 2021 or maybe early of late of 2020 to exit the stock, and given enough opportunity for somebody to exit. But if you haven't exited, if you are invested to it, then it's only the fault of investor itself. You have to just respect the prices and respect the market and follow with the trend rather than just fighting with the trend. This is what kind of my application for Dow Theory. This is a chart of kind of analysis we do in Peaceful Weekend Investing, where we go through the Dow Theory principle and apply them into our investing journey as part of the short-term basis as well. So we get the application applied more practically, and also we get signals early when we want to exit. This is a weekly chart, and these are kind of marking of the higher lows and higher highs and lower highs, and to find out when the trend has changed. If you want to know more, do connect with me through my social media handle. I've shared the link on the chart here, and I would love to hear and have a discussion with you. Till next video, I would sign off from now. Thank you so much for being with me for this particular video. Thank you. Bye bye.